Right, on to the questions. Why is the demand for VCTs currently so strong? And I want to ask that to Chris.
Thank you, Annabel, and thank you all for attending today. Everyone's aware, I think, of the tax breaks available for VCTs. They are attractive, they do encourage investment, and clearly they're a big driver of helping those businesses become successful. But I don't think it's just that. Over recent years, there have been changes to pension fund laws, maximums on lifetime allowances being reduced. So again, the number of alternatives have reduced, and at the same time, and I'm speaking very much from my own experience as a lead manager on an AIM focused VCT, we have noticed very substantial changes in the maturity and profile of businesses seeking to list and thrive on AIM. And I think it's fair to say that maybe 10 years ago, up to 40% of the value of AIM companies was found in sectors such as oil and gas exploration, mining, commodities. And it had the nature of a pioneering town, perhaps in the Wild West, quite speculative, volatile returns, lots of ups and downs. AIM's been around for 25 years plus now, and is really coming of age. And it's attracting businesses at innovative entrepreneurial businesses at an early stage in their development, but across very diverse range of sectors, addressing some very important needs in the market, whether that's addressing personal health, whether it's addressing the environment, whether it's addressing social needs. They are also businesses that are far more investable. That diversity, the prospects for sustainable growth, the talent that's emerging, all of those things I think are being recognized by the wider retail investor market. And instead of investing directly in a single company listed on AIM that may or may not be tremendously successful, suddenly you've got the opportunity to select an established investment trust that has got a collection of these businesses, many of which are proven over many years and are already profitable, cash generative, and even dividend paying themselves. But on top of that, you've got a good range of businesses that are just emerging with huge potential and with the ability to create substantial value over the next decade. And it seems to me that not only has AIM matured, but the retail investor market has developed in sync with that, and such that actually the demand for VCTs is being driven more by people's appetite for having a portfolio of emerging, young, innovative and fast-growing businesses, where the tax breaks are an attractive cherry on top. And that, I think, subject to markets remaining on a relatively even keel, I think that can only grow over the next decade. And that's what excites us here at Unicorn.
Well, that is very exciting, Chris. I've got to say, I'm really pleased you've got the maturity of the AIM market and the diversity of the companies on it, but also you've got retail investors who are really keen to invest in VCTs and the innovative companies they invest in. Malcolm, what's the demand? Why do you think the demand for VCTs is currently so strong? Have you got much to add to that?
Yeah, so I think of it from our own lens, which is as a specialist venture capital manager. And what we've seen with our own investor group is actually it's got younger and younger each year. And what we kind of read into that is more broadly when we ask people, is people are wanting more venture capital exposure in general, but they also understand it's a really difficult asset class to get exposure to in general as a retail investor. So why do people want access to it? Because it has not only a really positive impact on society, I think people are much more conscious about what their funds and what their wealth is used to do. So VC, venture capital, unleashes progress, it creates jobs, it drives innovation, all these important things, and it has spectacular returns if you can accommodate the illiquidity. If we look at the data points around, so we look for unicorns, but that's what we're hunting for as an investor. There were 116 made in Britain in the last 12 years. A quarter of them were last year. So we've seen like massive acceleration. So if you've decided you want venture, now the question is, how do you get exposure to it? And it's pretty exclusive in general. If you want it traditionally, you'd have to go to the traditional venture funds, of which they have very large minimum ticket sizes in the millions, and they focus their fundraising efforts on the pension funds and the institutions, not on the retail asset investor group. So as a retail investor, you've not been able to get exposure. So what the VCTs are really powerful for is they're now a vehicle through which retail investors can have playing field leveled for them. And as people are understanding that, they're now starting to look to say, okay, great, let's add VC and let's add VCTs to our portfolio.
Thanks, Mark. It's really great that retail private investors are finding VCTs as a way to get access to these kinds of unquoted high growth companies. Really interesting. Bevan, why do you think the demand for VCTs is currently so strong?
So look, the VCT industry has obviously been going for sort of over 20 years. And what you've got now is a cohort of managers that have got really strong long-term track records, and the VCTs have got really sort of good long-term sort of track records. So, there is a high quality investor group, but also really well established portfolio. So an investor into a venture capital trust now will be investing into an established, well-diversified portfolio. And a lot of the VCTs have got very attractive dividend policies. So as those businesses are maturing and being sold, that's generating attractive capital profits, which are then sort of being paid out to shareholders as sort of really attractive dividend yields. So I think that's another sort of element which is making sort of VCTs very attractive in this current environment.